Hey guys, this is lesson 2 in the market structure series. Today we're going to focus our attention on the famous break of structure and what it means. We're also going to focus our attention on various levels of market structure and why they are important. So for starters, in our last lesson, we discussed things such as how to identify and what is an uptrend, what is a range, and what is a downtrend. The rules of engagement to identify a higher high to higher low and how to confirm that higher high. So to start things off, you may have heard this terminology before. If you watched any of my streams, you probably heard me say this, the terminology break of structure. So for those that may not know, a break of structure is really easy to identify. In fact, we actually have identified a few of them. I just did not label it in our previous lesson. A break of market structure is when you have a candle body close in an uptrend from left to right, from a higher high to where price broke out from that higher high. So in this example, in this doodle rather, we have our higher high, a higher low. We have a higher high and a higher low and then a higher high. Okay, which is a basic uptrend, nothing fancy. When price broke across from left to right, this is known as a break in structure. You may want to create a template for this because it will help you as a beginner in labeling correct breaks or when an order block is able to be identified. Okay, this is quite important. To label such a template, it's very easy. You just click your trend line tool. For those that do not know, hit the settings icon. You can go in this text section here and just type in BOS for short. Now, in an uptrend, I have two different labels. I use the text alignment on the top for an uptrend break of structure, whereas I switch it to the bottom for a downtrend. Okay, you don't have to do that, but it makes things a lot easier. So you can actually label it and save it under the template section here. Save as break of structure bullish, or whatever you want to call it. You can just type in bullish BOS and whatever floats your boat essentially, but I'd also make one for the bearish case. So in this example, we have a bullish break in structure. Very easy. Now, in an off chance that, say, price were to finally come down here and make a equal high, an exact equal high, then that is not a break in structure. You would not label that as a break in structure, but rather you could label that as equal highs, which is another thing we'll talk about in later lessons. So as you can see, price made a high and a higher low. Price broke up with a candle body close, therefore initiating a higher high before another retracement down. When price decided to close above once again, you confirmed another break in structure. What about if you had a wick? Okay, what if it was just a wick? Something like this, right? You just had a wick candle, a bearish colored candle, use red. That is not a break in structure. But you may notice in one of my examples from our previous lesson, I have actually still drawn that line across from left to right, despite it not being a valid break. We will discuss that later on. But for short, the reason why I did not do that was because I want to show you guys how to identify the pull. Technically, no, it's not a break in structure. So that's why I did not use the break in structure template line during that example. You will not use that, okay, whenever you see something like this. In fact, when I see a wick across, I usually use a red X. And I use the text alignment in the center, which to me indicates a liquidity grab, or also known as a swing failure pattern. If you're not familiar with the swing failure pattern, also known as an SFP, Jayson talks all about them in his course. I will be talking about them later on in mine, so stay tuned. So that's very easy. Now, why do we need to be able to identify these breaks and structures? Well, as I mentioned a few minutes ago, they are very useful to identify and confirm order blocks, areas of demand, areas of supply, a bearish order block, for instance, or a bullish order block. They also help us identify the overall trend. They help us determine if the trend is weakening or gaining momentum. They also help us figure out when a transition in that trend has occurred. So let's say you have an uptrend, just like we have here, and you notice that over time, this uptrend is gradually making highs but each high doesn't look as significant. So what I can do is I can take my break of structure line and draw them all across here. Okay, I'll just draw them all across. And I can use that information to tell myself, hey, this is clearly dying off because each break in structure is decreasing in overall size. Is that a good sign for a healthy bullish trend? I would say not, right? That's generally not what you want to see during an up move like this. However, there are exceptions to that rule involving liquidity exceptions. For example, in the event you have a uptrend where price is declining, like this break is greater than this break, whereas this one is greater than this one, and this one is greater than this one, et cetera, et cetera. However, if liquidity is being engineered on each higher low, meaning that this higher low took out a bunch of liquidity, as did this, and perhaps this one even took out this one, that's a different situation altogether. And of course, we do have a liquidity section later on in the course. So we have ourselves an uptrend. We can see the break-in structures. We use them to identify this is a solid trend. It's doing what it's supposed to do. We identified our areas of demand, which you will not be able to do just yet. But we can also tell, hey, whoa, what just happened here? We just had a candle body close below the previous higher low. See, what that tells me is that we just had a shift in the overall trend. So instead of expecting this to break in a continuation of that trend as we had this whole time, I would expect a lower high and a lower low because that's what happens during downtrends. This is known as a transition phase, when structure goes from a bullish environment to a bearish environment, or from a bearish environment to a bullish environment, as indicated by the break-in structure. So as you can see here, this entire time, each higher low remained intact. This was a protected low, as was this, as was this. Even though this was technically a protected low, it was still taken out, which will ultimately happen. There's always going to be a case where you can have a protected low or a strong high, meaning that that low in particular did its job by breaking the previous swing points. This low was able to break above this previous higher high with a candle body close. Therefore, in theory, he should have been protected. That rule applies, yes, but ultimately structure is an ever-changing thing and it will not sustain itself. Perhaps price just came into a bearish order block, the one that we were waiting on for quite a while. We're better to produce a shift in trend, right, than an area of resistance. Okay, this is an area of resistance. So that's where you generally see moves like this, where you have the bearish flip in an uptrend or a bullish flip in a downtrend. All right, so we know what a break of structure is. Let's see if we can identify a few live examples. Let's go to the daily chart on Bitcoin again. So as you can tell, during our last lesson, we were drawing structure from this low and we went up from there. What we have now is we have a very aggressive uptrend, but instead of drawing it from this low, which was the COVID dump, and drawing it up from there, we'll start from somewhere more reasonable because that's outdated price action. We don't really need to know what happened from here. Is it good practice, though, for a new trader or even advanced trader that hasn't been using market structure as much as they'd like? Absolutely. I would highly suggest you take that path tool and take 30 minutes of your day and see if you can identify the structure. I will tell you guys this. Watching a course is one thing, but if you don't put this to practical use and you do not practice, you're not going to succeed using any of these methods. So I highly recommend that you put this to practical use. Our replay is going to be your best friend, as will live examples. So back on track. What do we have here? Well, I'm going to start from this low. I'm going to draw for more of a swing stance. I'm just going to say, well, this already played out. All this played out, even though, yes, that's a higher high and a higher low because you had two black candles in a row from this low anyways. I'm just going to skip past that. I'm going to draw from this high to this higher low. Price went ever so slightly higher. It made yet again a higher low. Price went up here. It went down again, and then it clearly touched again from left to right here. So again, you have a higher high. I wouldn't draw it to here because that's one black candle. Same thing here, that's one black candle, but this is indeed a very significant higher high. So where do the break of structures come into play? Well, this is where you'd have your break of structure line. Pro tip, if you hold Shift key on Windows, you can actually click the trend line tool, as I just did here, and it'll draw a perfectly straight line for you. Okay, see how I can't really, it's almost like a clock, right? It goes around just like a clock would. You could draw perfect trend lines. So that'll save you lots and lots and lots of time. I didn't know that at first. I wish somebody told me, in my first 2 years of trading that hotkey existed. Anyhow, at least I know now, right? So now we have a bullish break in structure. Although not very significant, it still remains as a bullish break. Although not significant, this is still bullish break in structure, and the trend is still continuing bullishly. So we have bullish break 1, we have a bullish break number 2, and finally, we have our bullish break number 3. Now notice how I drew this path tool up to the top of this black candle. This black candle has traded higher than the bullish color candle on the left of it. I don't want you guys picking only bullish color candles for your higher highs in an uptrend, because that's not the highest point. This black candle here is absolutely the highest point during what I call the hump. Let's look on the drawing board here. So the hump is the area where you have your high, you have the low in question, and then the higher high. This is the hump. Okay, so you always have to pick the highest point here, the lowest point here, and then you draw the break of structure line over as such to where the candle body closes. You can also draw it over, but you're not going to use the break of structure template if it's only a wick like this, okay? You can still draw it over to identify the SFP, again, using the red X template, for instance, but you're not going to draw the boss template, the break of structure, in an instance like that. So we have a bullish break in structure. Excellent. Okay, very easy stuff. So now price came up and made a higher high. We're going to draw what we think is the higher low so far, but although we are quite aware that this can still retrace all the way down to here, and then we'll draw another break in market structure. All right, so very, very easy stuff, right? This is not complex. I think anybody can get this. If you have to watch it again, you have to watch it again. It's not very hard, right? Once you see it a couple of times, easy peasy lemon squeezy. So if we get a break like this, again, we would then draw the trend line back over this way. We would say, okay, we have ourselves a bullish break in structure. Excellent. Protected low, because this is the lowest point. We'd then draw this guy up to here. That would be the higher low, and then off to the races again, more than likely. Based on how aggressive these structure breaks have been increasing over time rather than decreasing, we would not expect this trend to end because price is not in an area of resistance. There is no resistance here because this is actually in price discovery. So we do not have any areas of resistance, technically. But if there was an area of resistance, say it was like up here, then yeah, we could obviously, reevaluate as price makes its way in. But for now, we're not in an area of any kind of resistance. Smooth sailing, right? So we have 1, 2, 3, possibly 4 breaks in